It's official, the banks are coming out here in Australia and suggesting that we're not just gonna have one interest rate cut, we're gonna have numerous over the next 6 to 12 months. Now, when those interest rates cut, there are expectations that the housing market will absolutely take off. Now, if you're interested in my deep dive analysis of what I think is actually about to happen, then definitely keep watching. Hey guys, my name's Ravi and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button because I talk about real estate, personal development, and all things financial freedom. Now, I run one of Australia's fastest growing buyers agencies, Search Property, that focuses on helping Australians like yourself go out there, invest in real estate that actually makes sense. We have a data-driven approach when it comes to finding the right properties to get upside when it comes to capital growth. So if you need help in scaling up your portfolio, definitely click on the link in the description below to go onto our website and book in a free call. Now, the big four banks in Australia are coming out and saying home loans are gonna start cutting, and they're gonna start cutting a lot sooner and a lot deeper than most people think. We still have so many people out there thinking that inflation's still really high, and for that reason, we can't have interest rate cuts. But inflation is only one part of the puzzle. And we also need to know it's not a number we just see today, it's the number that we see trending from the last 6 months. It's the same mistake that the central banks made when it came to inflation going lower, when they were forced to keep rates where they were, instead they should have been cutting. And now we've made the opposite mistake, which is now keeping interest rates elevated while inflation has been dropping a lot faster than expected. Now, in saying that, nobody likes inflation. So I'm glad that they did take an approach where they kept interest rates higher, but unfortunately the cost of that is a per capita recession here in Australia and a lot of people really struggling with their home loans. Now, what the banks are saying is maybe we aren't gonna have to suffer for too long. So let's dive into what they're actually saying. 4 interest rate cuts are expected in Australia and it could spark a housing boom. An expected barrage of interest rate cuts next year could reignite another nationwide property boom, experts claim. ASX RBA target rate tracker published at the end of each trading day yesterday revealed Australian financial markets have begun pricing in 4 interest rate cuts within the next 12 months. The RBA is expected to first cut interest rates by 25 basis points in Feb, with 3 more by August according to the market expectations. It's the first prediction of multiple cuts since the RBA started hiking rates in May 2022. The cuts have been predicted on forecast drops in the US interest rates, which would raise the value of the Australian dollar relative to the greenback and put the RBA in a better position to drop the cash rate. And this is something that you need to consider, is not just what the RBA here in Australia is going to be doing, because while they want to focus on the inflation here, they also need to understand what's happening overseas. Because if you think about it, and I'm going to simplify this in the best way I can, if we suddenly see interest rates drop around the world relative to our Australian dollar goes up in value because now it becomes more attractive for people to bring in that money into Australia. And what that does is it means, yes, we've got all this money coming in, but our dollar is more powerful. And although people that want to travel would love that news, it is actually quite bad news for when we are trying to export things out because it's now more expensive for people in the US and other parts of the world to consume our goods. So while we sit here and think about our home loan rates, there are so many other things that play a part in the decision-making process. Now, I'm not sure when you're watching this, but you're probably going to have found that the Fed has now cut rates. And it's the first cut they've made in over 4 years. So that is then putting further pressure on the RBA to start making moves as well. When it comes to interest rate cuts, it's not just the US that are cutting rates, there are other developed countries that are also doing it. After one interest rate cut in March by the Swiss National Bank and one in May by Sweden's bank, there were another 3 in June. The European Central Bank and the Bank of Canada cut interest rates, and the Swiss National Bank cut rates for a second time as well. So we're starting to see multiple central banks start cutting rates. Some people go out there and say it's a massive conspiracy theory. All of these people sit in a room and they say, now we're gonna hike, and everyone hikes. Now we're gonna cut, everyone's gonna cut. What we learned back in school was globalization and how every economy is now, unfortunately or fortunately, connected. That's why when we find that there's gonna be pressures overseas when it comes to a market crash, everyone else will start to feel some of that. Now, here in Australia, we are somewhat insulated, but we are definitely not going to stand by ourselves when it comes to the market crashing if it happened around the world. We may be insulated and not have as much of a deep correction, but we still will have that correction. And the same applies to when interest rates cut around the world. And it's evident that they're starting to make their moves and Australia will soon follow. 4 interest rate cuts would bring much needed relief to existing homeowners and prevent many families from needing to sell their properties. But first home buyers have been warned that the cuts could do as much harm as good by increasing competition for housing and pushing prices up. This is important to note, is that while a lot of us are sitting there and saying, oh, I'm waiting for interest rates to cut, because then if they cut, I can finally get into the property market. As first home buyers or someone who doesn't own any assets at the moment, you might be able to get in because your servicing allows you to borrow more, but that could also mean that you're having to save a lot more as a deposit to get into that property. Because let's say, for instance, you want to buy a 500K property and you suddenly see a 10% increase in the price of that property, you're now having to save more as a deposit to get in. So your barrier to entry, although looks lower because your borrowing capacity goes up because interest rates cut, in fact, it's actually pushing you even further away from purchasing property. SQM Research Director Louis Christopher said 4 cuts next year, while still a more remote possibility, would cause a huge rebound in property markets that had recently been weaker. This included Melbourne and Sydney. Now, I've actually done an interview with Louis. You should definitely go check it out here. It's a podcast on my podcast channel, More Than Money. You should definitely go and subscribe to that as well. There is a strong history of rate cuts stimulating housing demand, he said, noting that new cuts would unleash a lot of pent-up demand from buyers. Many of these buyers had been sitting on the sidelines in recent years waiting for a change in rates, Mr. Christopher said. 4 cash rate cuts next year would mean the Reserve Bank Board making a decision to cut rates at 4 out of the 8 meetings is scheduled to have next year. The RBA's official cash rate currently sits at 4.35%. The current owner-occupier variable discounted rate sits at 7.07%. I can tell you now, you're getting prices a lot cheaper than that when it comes to interest rates. The RBA target rate tracker calculates the probability of changes in the overnight cash rate based upon the implied yields of very short-term 30-day interest rate futures. A lot of this, but all it means is that we may have interest rate cuts. It comes as several lenders cut fixed and variable home rates, both for owner-occupiers and investors, in early September. Experts said cut to fixed rates were often an indication that banks expected variable rates to be lower in the coming months. Now, interest rate cuts by themselves may cause some more pressure because there's more demand in the market and supply is not there. But that's only one part of the equation. If supply is continuing to go up during that time as well, you won't really see prices go much higher. But the latest data that's coming out when it comes to how much supply is in the market and how much is coming in the next 12 months, it is amazingly low. And that's not just my words, there's experts out there suggesting that it's amazingly low. We're not going to hit the targets that the government had put in place, and if we do, it's going to be some sort of miracle. It'll be through high density apartments. They're basically cardboard boxes that they're going to put up in the sky. And that may be your only choice to be able to purchase property and live in one. If you have the right strategy, you can rent in a location that you actually like and then invest in the areas you want to get ultimately the dream house. Now, I still think in 2024, 2025, it is still possible to go out there and build to get to the dream home. A lot of people try and go and get there straight away, or they might buy something that they live in and then they say, well, the next home is our dream home. That unfortunately is a strategy for losers. It doesn't work. Now, it may work for the 1 in 100 people, but for the majority of you that are watching right now, it's not the way to do it. Stop listening to the people that suggest to you this is the only way to do it. One of the greatest strategies which take the least amount of effort is one of rent vesting. I've got a video here that you should definitely go check out. It's a strategy broken down. It's exactly what I'm using to go and buy my dream home in Sydney, which will cost a couple of $1 million, but I'm okay with that because it allows me the choice to live where I want, enjoy my life in my 20s, 30s, and 40s, and it'll also mean that I can go and get the dream house and not have to go and compromise on my lifestyle. I hope you guys have enjoyed this video, but let me know in the comments down below, how many rate cuts do you think the RBA will make in the next 12 months? Comment down below and I'll catch you guys in the next one. Thanks guys.